All right, let's break down the latest earnings call from Orrstown Financial. Now, on the surface, it looked like a fantastic report for this Pennsylvania bank, but wow, the market's reaction told a completely different story. So let's dive in and figure this out. So here's the central puzzle, right? Orrstown just posted its best year ever in its entire 106-year history. Management was feeling good, they even raised the dividend, and the stock immediately sold off. So what on earth did the market see that the headlines completely missed? Okay, let's start with the headline numbers. First up, for the fourth quarter, Orrstown reported GAAP earnings per share of $1.11. Pretty straightforward. Now, $1.11 wasn't just a good number. It was a clear beat. You see, the consensus on Wall Street was for $1.08, so they came in 2.5% ahead of what everyone was expecting, a really solid result. And it wasn't just the earnings, right? The top line, the revenue, looked healthy too. It landed at almost $65 million for the quarter, which also just edged out what analysts were forecasting. So on the two main metrics everyone watches, Orrstown delivered. Check and check. And you know, this wasn't some one-off good quarter. If you zoom out and look at the whole year, the performance was just stellar. Net income hit a record $80.9 million. Return on average equity, a very strong 14.76%. And their net interest margin, which is a huge deal for banks, was over 4%. I mean, the CEO himself called it the highest reported annual net income in the company's history. You just can't get much better than that. And it wasn't just the numbers talking. Management's actions were practically screaming confidence. They bumped up the quarterly dividend by 11%. That's the fourth time they've raised it in just 18 months. Plus, they highlighted how their fee income is growing, making up over 20% of revenue now, and they're still investing in top talent. These are all signs of a business that's healthy and looking to the future. And yet, despite all of that incredible news, this was the market's verdict. On January 28th, the day all this great info came out, Orrstown stock fell more than 4%. Just ouch. So this is the big disconnect we're talking about. In one corner, you've got record income, an earnings beat, a dividend hike. And in the other corner, the stock drops hard on below average volume and lags behind its competitors. To understand why, we have to stop looking in the rearview mirror at the great quarter they just had and start looking at the road ahead. And, you know, you might think, well, maybe it was just one bad day. But nope, this wasn't just a one-day blip. Over the month leading up to the report, Orrstown was already down almost 4%, while the main regional bank ETF was actually up nearly 2%. So the sell-off was really just an acceleration of weakness that was already there. Okay, to solve this puzzle, we have to zoom in on the single most important metric for a bank like this right now, net interest margin. You'll hear it called NIM. All it is really is the difference between the interest a bank earns on its loans and what it has to pay out on its deposits. It's the absolute core of how a bank makes money. And here it is. This is what the market was obsessed with. It wasn't the awesome 4.04% NIM from last year, it was the guidance for the year to come. Management said they expect NIM to drop a bit, to a range of 3.90 to 4.00%. Why? Well, they're expecting the Fed to cut rates, and a little boost they were getting from an old acquisition is starting to fade. So the market sold the news because the future looks just a little tougher than the past. And hey, don't just take my word for it. The company was totally upfront about this. The CFO, Neil Connie, said it directly. The bank is asset sensitive. That's just a fancy way of saying when the Fed cuts rates, the income they get from loans will fall faster than the interest they pay on your savings account. So they knew this squeeze was coming. So what could actually change this story? Well, from here on out, investors are going to be watching for three key things. First, can Orrstown prove that its profit margin, that NIM, can find a floor at 3.90% and not fall further? Second, can they keep growing their other businesses, like wealth management, to hit that consistent $13 to $14 million quarterly pace? And third, if the economy gets a little rocky, can their loan book stay as clean as it has been? Those are the new goalposts. Okay, so that's the lay of the land. We have a high-quality bank that's running into some headwinds that are affecting the whole industry. With all of that in mind, here's our official take on where Orrstown goes from here. We are initiating our coverage on Orrstown Financial with a market perform rating. So let me walk you through our thinking here. Orrstown is a really strong operator. Their record results totally prove that. But we think that great execution is already baked into the stock price. The big story for the next few quarters is going to be the macro environment, specifically what the Fed does with interest rates and how that pressures the bank's profitability. So until that path gets a lot clearer, we expect the stock to pretty much trade in line with its peers, probably bouncing around in a range. We're setting our price target between $36 and $38 a share.
This is not financial advice.